Hello friends, how are you doing? Yesterday I have discussed the truncated or failed wave in the series of Elliot wave principle, and today I will discuss about the expanded or irregular flats. But before that I want to remind you the flat pattern which I have discussed earlier in one of my webinar, because expanded or irregular flat pattern are the next series of flat patterns. So for that purpose you will need to recall the flat pattern in the Elliot wave principle, and these flat patterns or the expanded or irregular flat pattern can occur in wave 3, wave 5, or in correction pattern or B or C pattern. So there are some guidelines and rules how to identify that I will discuss after this chart. So friends, carefully look at these patterns. If you will notice the electro principle in uptrend, then flat pattern will look like this. It will be consist of three waves: wave A, wave B, wave C, and nearly the starting point of wave A will be equal to end point of wave B, means where the wave B will end, it will be almost equal to or lesser than equal to the beginning of the wave A, and C will be in the level of end point of wave A. So if you know the technically double bottom like structure, then it will be almost similar to that structure. So in the double bottom we get the 2 points at the bottom level and 1 point at the up level, and double bottom also signals the reversal of the trend or the sideways trend. Similarly, here also the flat pattern suggests the correction, and it can act as a continuation pattern as well. Means if you notice the flat pattern in the fifth wave or in the third wave, after as soon as the wave C ends and after that the next will be maybe, means we cannot say every time that the next wave after the wave C will be a breakout wave, but uh, it signals that if the correction pattern is about to end, and if the instrument or the currency pair can continue the ongoing trend. That already I have discussed this flat pattern in one of my webinars. And in downtrend, just I am correlating things so that it will be easy for you to understand the flat pattern in the expanded and irregular flat pattern. So if you will notice the Elliott wave principle in the downtrend, and the flat pattern in the downtrend will be a double top like structure. We cannot say that it will be a double top structure, but it will to just make you easier, so that easily you can identify and correlating it with double top like structure. Already kindly watch that earlier video, so it will be much easier for you to identify the pattern, and a flat or expanded flat will look like this. So flat or expanded flat pattern will look like this. If you know the head and shoulder like pattern, roughly it will be equal to that. So see, technical analysis is almost same in either way. Means at some point of time you will get some similar kind of structures in the technical analysis. And Elliott wave principle is also based on the technical observation that the market moves in a repetitive pattern. So if you will know expanded fat, for just keep in mind that it will be just like a head and shoulder pattern, but the some things are there, some rules and guidelines are there which you will need to follow, so that uh, easily you can identify it on chart. So if you will notice that wave B will well pass through the beginning of the wave A. Suppose wave A is beginning has begun here, then wave B's endpoint will be much higher than that levels, and wave C will also surpass the area of wave A. So this kind of structure you will get in uptrend and downtrend. Again the similar structure, wave B's endpoint will be the higher than the levels of the beginning of the wave A, and wave C's endpoint will also be much higher than the endpoint of the wave A. So wave C will be longer in length than wave A, and wave B also will be longer in length than wave A. So both the waves, wave B and wave C will be for sure longer than the length of the wave A. So this is the easier thing to keep in mind, that wave A, wave B and wave C will be much longer than the wave A. So I will show that on chart, so that will be easy for you to understand. Just keep in mind this structure, or you can take the screenshot and save for you, or you will get it on many internet books which you can download easily and notice that, observe this pattern. So expanded or irregular flat pattern are the, I have already described that wave B will be the extended and goes beyond the area of the wave A, because wave A is just the beginning of the ABC pattern. That is also one kind of corrective pattern, and this corrective pattern, as I have mentioned earlier, you can notice in wave 3, wave 5, or in wave 5 or after the wave 5 in corrective patterns of wave ABC. Some easy rules for you, that so that easily you can identify. Wave C is the impulse wave, and waves A, B are the corrective waves. Why wave C is the impulse wave? It will be much longer than the wave A and B, and it will show the sharp momentum in the direction. So that's why it is an impulse wave, that is called as the impulse wave. Why we call the impulse wave? Because impulse waves you are generally longer in length than the motor corrective waves. So that's why if you get any wave longer than other waves, you can call it as impulse wave. Wave B retraces beyond the end of the previous impulse wave, which is the start of the wave A. So friends, rather than just discussing points, let's go back to chart where it will be easy for you. I can show you easily how you can notice the expanded flat or irregular flats. So what you will need to do, you will need to find the instrument in uptrend. So like this is the 15-minute chart. uh, you can apply Elliot wave principle on any time frame. Just yesterday I have told you that. So if you will notice the here wave 5 ended, and then what you will need to do, connect the swing high or the fifth wave's endpoint with the swing low in the series. This will be a wave A. I will name it. So it will be easy for you to remember. Each wave in itself can consist of many waves. That's why they are called as the waves. Because if you are little familiar with the physics, you will be already knowing that in itself consists of many waves. So this is the wave A. What we did? We have joined the line with the end point of the fifth wave with the lowest swing low in the next series. So we have got the wave A. Let me mark the wave 5 as well. So this is the wave 5 in the earlier series. And then wave A we will need to look for a wave B. So join the end point of the wave A with the next high in the series. So here is the next swing high in the series. So this will be a wave B. This is wave B. And as per our guidelines, wave B should be well above the area of the wave A. So we have got that condition fulfilled here. Then our next task is to find the wave C. Here again same thing. Join the end point of the wave B with the next swing low in the series. And as per our guideline and rule, wave C should be longer than the wave A and wave B. So we have got the longest wave in the series. So let us name it wave C. Friends, Elliot wave in itself a very large topic. So even if I considering even if I continue hosting webinar on the same topic, it will I can carry on for a year as well. So then only you will be very much familiar with the concept and it will be easy to find it. So as I have told you, each wave can consist of many multiple waves. So here you can get the 2-3 waves. Similarly here you can get the another waves like here. Just I have shown you on the book in the bookish pattern. So here each wave can consist of many waves in itself. Similar in wave C we can get the so many waves. My drawing is little messy, so better I should remove it. So this is a structure of expanded flat. Now I will show you the entry point. See, before that here is the Elliot wave principle. Means as I told you this I am telling you in the third wave. In the wave 3 because I have searched lot but didn't find the exact structure in the fifth wave or in the corrective pattern. So that's why here we got the breakout. So this is the wave 1. Then wave 2. What you have to do? Join the swing low with the swing high in that series. So you will get the one wave. Then you have got the wave 2. Similarly join the swing high with the swing low. And then wave 3, and after that it has got the corrective pattern. So that for example I am showing you, and as soon as you get the wave C, The next will be a breakout way. Here you got the longest breakout. This is the characteristics of the Elliot wave. It gives you an idea of the upcoming breakout and generally tops and bottoms in that instrument. Now we entry point. The main thing is the entry point. So what you can do, you have got the wave A here and then wave B wave, and it is wave C here. Now the task is to find the entry point, how we can use this knowledge in the trade. So what you can do, you can look for an earlier reference point, because the basic thesis beyond the Elliott wave is that market moves in a repetitive pattern. So similar thing must have been happened in the past, and for that purpose you can use the similar thing. So you will need to look for similar kind of pattern in the past, because as per my experience what I can say, it's very easy to look at the structure on the chart when it has happened, but while looking for a trade in the live market, it is very difficult to understand that thing. Now it's very easy. I can explain. Yes, this is wave A, wave B, wave C. You should open long position here. You should open sell position here. Or even you can look for a long position here for a shorter target, short profit target, or even for intraday trade. It's easy to say that, but when the things will be going on in the live, how you will identify that this will be a exact structure of the Elliott wave? So that is the difficult thing. That's why what you will need to do, you will need to correlate the same structure with the structure in the history. And another things, you can combine the two three things like I used to do. Here we got the retracement. So this high is, this swing high is higher than the previous swing high. So suppose, let me hide this part. We are here. We don't know after that how market will be, how the instrument will be going in which direction. So we don't know what will happen next. We are, suppose we are here. So we have got the wave A, wave B and wave C structure. So what you will need to do, as this swing high, market is little trying to move to the higher side, and as soon as we get a next swing high, here we got the next swing high. In the series, market again trying to move to the higher side, and we know that we are familiar with the pattern. We know this is the expanded flat pattern, irregular expanded flat or irregular flat pattern, and market should reverse to the higher side. So what we can do, we can take a risk. As this is the 15-minute time frame, the stop loss will be very less. So if you have got the buying pressure visible here, so you can look for a trade opportunity, long trade opportunity in this level. So with the stop loss or below this level or below these levels, because as per our other technical knowledge, it suggests that the stop loss should be below the previous support if you are looking for a long trade. So we will need to keep the stop loss below these levels. So 122.668 levels are here, and here suppose we get a trade around these levels 123.369. So it is almost the stop loss of 40 plus 40 80 pips. This is the Euro JPY. So very fast moving instrument because it gets affected by the movement of USD JPY and the Euro USD. So both two things affect it. So it moves generally. Its daily trading range is near 200 pips, or sometimes it moves up to 300-400 pips also in 1 or 2 days. So that much fast it moves. That's why we have got the 80 pips stop loss. So for 80 pips is a big thing. So we will need to calculate if the trade goes right. Should can we get the double of that risk? So calculate first that. Here the 123.4 levels, then here the next high is around 124.366. So almost 100 pips. And if we don't know, that's why what we can do, we can look for a longer time frame. This is the shorter time frame, so we can go on hourly time frame and look for the next resistance on the longer time frame. And if it suggests that yes, you can get that much profit, then only look for a trade in that instrument, otherwise simply leave it, because no point in risking a capital unnecessarily when there are no means when there are very less chances of getting double of that profit, getting double profit of that much risk. So in that condition, simply it is better to avoid that trade. But if the Elliott wave principle has to come true, then it should well pass through beyond these levels. So next thing what can do, as soon as we get a confirmation that S, this is expanded flat or regular structure, irregular structure, and that will be confirmed here, because as per the my understanding, the next wave after the wave C should be a breakout wave. It should see that wave itself should see a breakout from earlier levels, and it has got that breakout here. So range is here, and it has the swing high is quite above those levels. So what you can do, if you are a conservative trader, after that you look for a correction. Here you got the correction, but again the confusion will be there at that time, as it was continuously going down, down, down. So you don't know whether it will be uh, moving to the higher side or it will remain in the sideways trend. Now it is just looking easy that oh, it's so easy to open a trade, but that is not the case in live trading. So what you can do, you can look for the next support. You have got the support around these levels, because as soon as the instrument passes those levels, resistance levels, it acts as a support. So you have got the support here 124.366. Instrument reverses back to the levels above it, but again it retraced to the lower level, and again it tried to move to the higher level, and this time this swing high is higher than this swing high. So you can look for a further correction, and you can open a trade here. You can keep a pending order here with the stop loss below these levels. So you can adopt a different strategy that suits to you. My purpose is to explain you multiple things which you can use in your daily trading. So if you want to follow a Elliott wave principle, you will need to keep in mind these structures and how you can. It's not a thing that simply you will learn the pattern and you will not be knowing the entry points, where to enter into trade and where to get out of that trade. So that's why I'm explaining the further things that here there are the multiple ways you can identify the entry points. So this is the one kind of strategy you can identify the trade entry points, like using the support level. And next time again you got the instrument around those levels, so you can get the multiple entry points. Just calculate the stop loss and profit ratio levels. And as this is the 15-minute chart, you can look for a longer time frame, hourly or 4 hourly time frame, whether you are getting a double profit of the amount you have risked in each trade. That will be a easier way to remain in profit. So friends, if you have any questions, type in the comment box. I will be happy to answer. So today I have described the expanded flat or irregular flat. The structure will look like this in the uptrend. And in my next series, I will describe it in the downtrend. So this will be a structure visible in the uptrend, and this structure can happen in wave 3 or wave 5 or in the corrective pattern or in the wave B. So this will be a wave A, wave B and wave C. And here, as soon as you see a breakout wave after the wave C, then after you can start finding entry points by using the various other techniques. And after this, I want to share with you a one important thing. Our Ducascopy team has got a very good testing tool on the Bloomberg terminal, and they can freely test your strategy for you. You have to just email it to the research team. You can email your strategies detail to the Ducascopy research team. There is one special video made on this topic by analyst VZ. He is guiding you about the procedure how you can mail your strategy to the research team, and then they will test it for you. Here back test, do the back testing of your strategy, and they will show you the result, how your strategy is profitable, how it can perform, how it has performed in the past, and so that you can find the reliability about your strategy. So generally most of the people charge for back testing of strategy, but Ducascopy team is offering this service at free of cost. So I advise you friends that if you are using any strategy, using the indicators, technical indicators like the Fibonacci, like the RSI, like the daily pivot points, pivot points, or Fibonacci retracement, Bollinger Band. Well, there are various technical indicators. If you are following any other indicator, and if you want to backtest your strategy, simply mail it to the Ducascopy research team. They will test it for you at free of cost, and that will be a very helpful for you. So friends, try that service at free of cost. And here I am ending my webinar. Thank you for you. I will be back soon with another topic.